Good evening. Here are the detailed listener-friendly summaries of today's news, translated into English and presented topic by topic in brief, clear lines. Topic 1. U.S.-Iran maritime clashes escalated after the U.S. struck and later seized an Iran-flagged freighter, Tuska, and the IRGC had been firing on commercial ships transiting the Strait of Hormuz. Iran briefly declared the strait reopened, then re-restricted passage, and a U.S. naval blockade and warnings of retaliation have raised tensions as a 2-week truce nears expiration. Oil markets reacted sharply. Brent near $95 to 96 BL and WTI near 88.90 BL, with daily moves often 5 to 7%. The Strait of Hormuz carries about 20% of global oil flows, so the effective disruption risks daily supply losses in the millions of barrels and cumulative shortfalls that analysts estimate could be very large. Regional markets diverged. Most Asian bourses rallied: Japan, China, Hong Kong. Europe slipped, stocks 600 0.9%, with travel and leisure weak and oil and gas strong. And U.S. Treasury yields stayed relatively steady: 10-year 4.262%, 2-year 3.79%, 30-year 4.91%, reflecting limited bond volatility so far. Strategists warn investors may be too complacent. Deutsche Bank and others cite past misreads, e.g., Ukraine 2022, and question U.S. control of the situation. Key watch points include whether Hormuz is truly reopened, prospects for U.S.-Iran talks, e.g., potential Islamabad meeting, truce expiry, and weekly oil inventories and labor data. Topic 2. Following a Supreme Court ruling that Trump-era tariffs imposed under IEEPA exceeded congressional authority, lower courts ordered refunds, and U.S. authorities are activating a refund process covering roughly 330,000 importers and more than 53 million shipments, amounting to about $166 billion, including interest. Customs and Border Protection has launched a CAPE tool inside the ACE portal, so importers or customs brokers can file refund claims, with a phased rollout that initially accepts only certain items, e.g. pre-final liquidation or within 80 days of final liquidation. CBP aims to issue refunds typically within 60 to 90 days after claim validation, but high volumes, system bottlenecks, documentation errors, and manual review mean delays and rejections are likely. Only parties who actually paid duties can claim, and electronic registrations and strict paperwork are required. While importers receive refunds, there is no automatic legal obligation to pass monies to consumers. Some carriers or companies may refund customers voluntarily or after litigation, and political or administrative developments could still alter timing or scope. Topic 3. Adobe launched CX Enterprise, a suite of AI tools to automate and personalize enterprise digital marketing and customer responses, and notably announced interoperability with partners, including Amazon, Microsoft, Anthropic, OpenAI, and NVIDIA, an example of large-scale corporate collaboration and deal-making. New product launches from both established and newer AI firms, e.g. Anthropic's Claude Design, are sharpening competition and accelerating the AI race, driving rapid product cycles and new integrations across platforms. The surge of AI automation concern has intensified selling pressure in software stocks and market volatility. Adobe's share price has fallen around 30% year-to-date, though it was up about 2.2% intraday on the day of the announcement. Overall headlines combine big corporate deals, market swings, and geopolitical risk with a fast-moving AI competition that is reshaping software sector dynamics. Topic 4. AST SpaceMobile shares plunged about 12% pre-market after Blue Origin's New Glenn placed AST's Bluebird 7 satellite into a lower-than-planned orbit, and AST concluded the satellite was effectively lost. Blue Origin acknowledged an orbit error but has offered limited further detail. AST says the loss will be covered by insurance, that its year-end 2026 deployment target, roughly 45 satellites, may be delayed, and that other launches and that